Hello. Do you know what direct and indirect income is? Direct income can be termed as an active income generated by a business. Direct income example is something like income from selling products, business, income from business services. So what is indirect income? Indirect income is one which is earned by way of non-business activities. Indirect income, an example of this is sale of old newspapers, sale of carton boxes, sales of old bottles, or sales of any other fixed assets. Do not forget to subscribe. Please take a minute and look at a whiteboard for a moment. Let's learn some more stuff.
Business incomes are directed into two broader categories, namely direct income and indirect income. Direct income refers to the income that a business earns through activities that are directly related to the day-to-day operations of the business. On the other hand, indirect income is the revenue that a business generates through channels that are not directly related to its day-to-day operations. If you run a coffee shop, you probably have a manager, employees, and suppliers. The profits you get directly from the sale of coffee, snacks, and other beverages in such a store constitutes direct income. Therefore, direct income can be termed as an active income generated by a business. This explains why any shrewd business person will easily tell you when there is drastic changes in their direct income patterns. For instance, if your coffee shop generates around $800 per month worth of direct income, and this figure happens to drop to $400 in the given month, you will automatically know something is amiss. Therefore, direct expenses are easy to track because the entire business depends on them. If your coffee shop was to register a loss in a given month, you would adopt all manner of drastic measures to bring it back to profit-making. This is because if direct income is not well tracked, your business could easily collapse. And remember, whether your business performs well or dismally, you would still need to pay rent, pay your employees, suppliers, as well as renew all municipality licenses. In essence, direct incomes are very important for the existence of the business, so much that a little lapse could cause the business to head south. Direct income example: income coming from selling products, business. Income from business services. What is indirect income? Now, in the same coffee shop, you probably have newspapers, old cutlery you no longer use, bottles and cans, etc. You may decide to keep them or dispose of them. Usually, many businesses would not worry about disposing of old newspapers until they have made heaps in their offices and are consuming space unduly. Of course, a businessman will not just discard them. Instead, he will assess their value and then put them up for sale. The kind of revenue generated this way is what constitute indirect incomes. Evidently, indirect income is not something your business needs to operate. You can consider it an extra stream of cash, or better yet, passive income. However, indirect income has a way of salvaging a business that is in dire straits. For instance, it would be unreasonable to sit back and watch your business make losses when you have a whole carton of cutlery you don't use or an old delivery cart that is just lying around. Indirect income example: sale of old newspapers, non-business. Sale of carton boxes, non-business. Sale of old bottles, non-business. Sale of any fixed asset, non-business. In the end, let us sum up. Direct expenses. Direct expenses are those expenses that are paid only for the business part of your home. For example, you pay for painting or repairs only in the area used for business. This would be a direct expense. Indirect expenses. Indirect expenses are those expenses that are paid for keeping up and running your entire home. Examples of indirect expenses generally include insurance, utilities, and general home repairs. Since these are expenses you would pay for in the entire home, These are considered indirect expenses.
Do not forget to subscribe.